What's up, everyone? Welcome to my YouTube channel. In today's video, I'll be explaining to you how Jeffrey Benson trades the forex markets. That is, I'm going to give you a summary of his strategy. Although he has already explained how he trades the forex market in his YouTube channel, so I'm basically just summarizing his strategy for you. Okay, and I was also a student um some years back when he sold the beginners to cash out course. Yeah, so I was among the students that purchased that course and joined this community that period. So I can confidently say to you that the strategy in his course right there is the same with everything he has explained in his YouTube channel. Okay, it's just that sometimes when we see this information on his channel, or we take it for granted. That's what many traders, newbie traders, they do. Like when they see a trader that is doing well uploading his strategy on the YouTube channel, they feel, oh, this cannot be everything. There has to be something else. There's another secret he's not revealing. He or she is not revealing. But the basic truth is that majority of forex traders, they expose their strategy for you. It's just hidden in plain sight there for you. Well, you don't want to believe because maybe you not pay money to access it. That's why. So this video, I'm just going to explain to you how Jeffrey Benson trades. Also, let me add this. The strategy I used it to pass my funded accounts that I bought in the year 2022. That was when my forex funds was still around. So I was able to use this Jeffrey Benson strategy to pass a 10K challenge account, pass phase one, phase two, and I also got funded that period. I also made a couple of withdrawals, and you can see some of them here. I still have the screenshots. So yeah, the strategy is effective. I won't lie, very very effective. I mean that's what it's still using till now, and it's still milking the markets back to back every week, every month. So guys, without wasting much of our time, let's start the video proper. So guys, in trading, there's what we call trading confluence. Now, a trading confluence is a list of criteria or confirmations you must see before taking a trade. So Jeffrey Benson uses four trading confluences, and they are psychological levels, high and low of the week, trend line, and chart pattern or candlestick patterns. Let me just type that out. Alright, so these are the four confluences Jeffrey Benson used in his strategy. That means before he takes any trade, he must see these four things on the chart first before entering that market. Alright, so I'm going to explain every one of them one after the other, starting with the psychological levels. Alright, so psychological levels, these are simple round up numbers that the banks and hedge funds they pay attention to. Not only the banks and hedge funds, majority of forex traders they pay attention to these psychological levels. But why? Now let me explain to you. The psychological levels they are considered significant levels because of its round numbers. You know, humans in general, we always tend to price um, anything we want to purchase to a significant number, or should I say, a round up number. Let's take for instance now you went to the market and to get a pair of shoe, and the seller tells you the price is, let's say, $1,250. So you want to price it to the nearest significant price, like let's say 1,200 or even 1,000. So the same thing applies in the forex market using the psychological levels. Now, most traders like the banks and the hedge funds, they set their take profits, their stop loss, and they take entries at these psychological levels. All right. So now let me plot the psychological level on the chart for you. Let me just shift this first. Okay. So for you to plot that, you need the horizontal ray tool. So you come here to this, to the left hand side of your trading view, to where the tools are. Then you look for horizontal line. That's it there. Click it. You place it on the chart. Let me start from the bottom here. So now you go to the settings for that tool. Okay, and go to coordinates. And you can see the price at which it is right now. So you just edit it to a round number. Let's start with 1.2000. Okay, 1.20 is too low. Let me take it up. Okay, let me start with 1.2100. Okay, let me plot another one. So psychological levels, they are always 50 pips apart from each other. 50 pips apart from each other. So 50 pips away from 1.21000 will give us 1.21500. Are you seeing this? Let me increase the fonts. I think it's too small. So you come here, increase it, so that's too big. Okay, I believe you can see the price now. Can you see it properly? So that's it, 1.21500. So the next psychological level is also going to be 50 pips apart. That's going to be 1.2200. Okay, go to settings, 1.2200. All right, so I'm going to fast forward this part. I will just do everything. I want to set up psychological levels on this chart to this peak here. Okay. All right, so guys, I'm done drawing the psychological levels on the chart. I believe you can see it properly. Okay, so these psychological levels now, they act as support and resistance zones, also known as supply and demand zones. You can see how it acted as a resistance here. First acted as the support, turn resistance. Can you see it? Here it acted as support, resistance, support, resistance. Are you seeing this? Support, resistance, support, resistance. Also down here it's held as a support zone. So price is always moving around these zones. There's always a reaction around psychological levels. So that shows how effective it is in the forex market. So this is one of the confluences Jeffrey Benson uses in his strategy. All right. So the next confluence now is the high and low of the week. Now, this high and low of the week is a concept developed, or should I say created by Jeffrey Benson himself, because so far I've not seen any other trader who make use of this concept. Okay, is the only one I've seen who, because it's the way he draws his own eye and low of the week is different. It's different. So let me show you now. Okay, in drawing it, you have to go to the H4 time frame. That's where he draws the eye and low of the week from, and he draws it on Monday. That's the first day of the trading week. Okay, draws it on Monday. I'm not going to use this week Monday because of the way the market opened. There was a gap, so I'll make use of the previous week Monday. So this was last week Monday, Monday 27th January. Okay, so in drawing the high and low of the week, what you do is you mark up the first two H4 candles that formed that on Monday. Okay, the first two H4 candles that form that first day of the trading week, which is on Monday, you mark the highest points of that two H4 candles and the lowest points of the two H4 candles. So for this week, the highest point is here. The highest point was here. Then the lowest point was here. So you mark it also with your horizontal ray too. That's it. So last week, this was the high of the week and the low of the week. Now, what's the logic behind this high and low of the week? Okay. Um, After marking it out, you now wait for a decision candle. Now, what is a decision candle? Decision candle is the H4 candle that will break either the high or the low that you just marked. So, for instance, for example, if the decision candle breaks to the upper side, is an indication that you will be having more of buy trades that week. Okay, while if it breaks down to the low of the week, then it's an indication you have more of sell trades that week. So this is, trading is probability. It's not certain. It's not a must that, oh, once price break above the high, we'll just be looking for buys throughout that week. No, no, no. It does not happen all the time. But there's a logic behind it, because most times when price push back to this high or low of the week, there's a reaction. Price rejects that zone. You can see what happened that week now. Price came back on Thursday to the high of the week and it rejected it and started selling. Same thing happened here on Friday. Tested it and started selling. Okay, so that's the second confluence. Now the third one is where did I write that in out again? Okay, third one is trend lines. Trend lines. Okay, let me switch over to 1 hour time frame back. Okay, I need a plain screen. All right, so trend lines. I've explained trend line before in one of my videos, but I will explain it again. Graphical, with a graphical representation first and foremost, before I will show you how it is on the chart. Okay, so using this part tool, I will show you how to identify a trend. In the forex market, we have three types of trend, or should I say two: the up and the downtrend. Then the third one, it's not really considered a trend because it's a ranging market. That's in that one, the market is just moving sideways like this, like this. So that's a ranging market. You don't use this strategy to trade in this kind of market at all. Once you see the market is moving sideways like this, you stay away from the charts. This strategy won't work for it at all. Okay, so this strategy is mainly for trending markets, a market that's going trending upwards or downwards. Okay, all right, now so this is how you identify a market that's on a downtrend. Once the market is creating lower lows and lower highs, then it is confirmed that that market is on a downtrend. Oh, made a mistake here. All right. So once you see market creates two consecutive lower highs, what you do is you bring out your trend line tool, you connect those two highs or those two tops, lower highs, and you extend your trend line to downwards. Okay. After extending it down, what you will now be anticipating is a pullback to the trend line for a third touch. For a third touch, once price touches the trend line again, there's every possibility that the market is going to drop and continue the down trend. Okay, so this third touch of the trend line is always very effective. Like the market can come back to retest again for the fourth time, can retest for the fifth time, and so on. But trading this third touch is the best because it's more likely to hold. Because any moment, anytime the market is coming for the price is coming to retest the trend line for the fourth time, is there's every likelihood that that trend line won't hold. It's going to break out and reverse. Okay, so that's that for a downtrend. Now let me create. So that's that for a downtrend. Now let me show you how an uptrend looks like. So once the market is creating higher highs and higher low, the market is said to be in an uptrend. Said to be in an uptrend. So once you see these two troughs, also known as two bottoms, you place your trend line tool, use it to connect the two bottoms and extend it upward. Okay, so once price come back for the third touch, you anticipate a bounce from the trend line, giving you an opportunity to enter this trade for a buy. All right, so that's how to spot a trend in the markets, an uptrend and a downtrend. All right, actually there are two ways of trading a trend line. Okay, this method I just explained to you is known as a trend line bounce. Okay, now there's also what we call a trend line break and retest. Let me show you how it looks like. So in a situation whereby market has been selling for a long time and a reversal is likely to happen soon, this is what markets will do. It will come to the trend line, to break past the trend line, you get, break past the trend line, to pull back to the trend line, reject the trend line, that's the retest, and continue the upward movement. Now this is what you call a break and retest trade. A break and retest of a trend line. This is how you trade it. Okay, now let me show you all this in the chart. I decided to switch over to the 1 hour time frame because that's the time frame Jeffrey Benson uses this strategy for the most. Okay, you know he's a day trader, that's why I make use of the 1 hour time frame. Then the 15 minutes time frame is our entry time frame when using the strategy. That does not mean you cannot use it to take swing trades. Okay, you can as well use it, but you know swing trades is for higher time frames like your H4 and your daily. Okay, so now on this H1 time frame, what can you see? What can you see? Now there's something you need to know about plotting your trend line. For a trend line to be valid, it has to touch at least two bottoms for a bullish trend line and two tops for a bearish trend line. Once a trend line has those two, that criteria, once a trend line touches two tops or two bottoms, it is considered a valid trend line. Now another thing you need to know, this is, should I say it's a secret, because not everyone talks about it. Like if you watch other videos about trend line, very few persons mention this. Like in short, I've only heard it from Jeffrey Benson before. Okay, It's called relevancy test. Relevancy test. A trend line needs to beat the pass the relevancy test. What does that mean? You see this bullish trend line I just drew here. It's not how do I put it now? It's not in accordance with the current position of price. Like it's not relevant to the current position of price. So among these two trend lines, which one do you think is more relevant to where price is now currently? Is this bearish trend line? Because it's closer to where the current price is right now. From here I can see market created two tops. So extending my trend line downwards, you can see market came back for a third touch here. And what happened? It reacted to the trend line and market sold all the way down to this point now before it's pulling back to it again. And you can see it's still rejecting the trend line. All right. But our main focus is cashing this third touch. This thing happened on Friday last week. You can see this massive drop. Okay. So let me leave that for now first. Let's continue on spotting trends in the market. Okay. Here you can spot a trend here. A bullish trend. You see that there's two lows available. 1, 2. All right. Then here again, there's another bullish bearish trend line here. You see what happened here? First touch, second touch, third touch. Then during the fourth touch, market broke the trend line, retest the same trend line before buying. Can you see the break and retest I talked about earlier? This is it on the charts. Okay. So now, I think that's the last. No, that's not the last confluence. The last confluence is chart pattern slash candlestick pattern. All right. So like I said earlier, the markup is done. The markup for this strategy is done on your 1 hour time frame. Okay. Then the 15 minutes is used for taking your trades as the entry time frame. So this chart pattern, you look for it on the M15 time frame. Okay, so first of all, let me mark up an entry point on the charts before switching over to the M15 time frame. Okay, all right, so like this point I marked here. All right, so like this bearish candle I drew here and bearish trend line I drew on the charts, you can see price came back for a third touch here, and why it was pulling back to these points, this is our point of interest. What confluences did we have there? Okay, first of all, we had this psychological level, that's 1.24500. That's one. Two, we had the high of the week was above the trend line, the low of the week was below the trend line. Perfect. That's two. Then our third confluence was the bearish trend line. That is theory. Now currently we have 3 out of 4 confluences present. Okay. So all we have to do now, after spotting these 3 confluences, we wait for the fourth one, which is the chart pattern. And for you to be able to spot this chart pattern, you switch over to the M15 time frame. Okay. Switch over to the M15 time frame. And this is it. Alright. You see what price did here? Now, in trading GBP USD, because that's the major pair, that's the only pair Jeffrey Benson trades, GBP USD. Okay, and from his experience trading this pair, also from my experience too, we've noticed, wow, it's not easy. So I've noticed the same thing with a big forex trader as Jeffrey Benson, that in GBP USD, price always forms, most times forms the M pattern on the M15 time frame when it wants to sell off a trend line. Then when it wants to buy off a trend line, it forms a W pattern most times, while some other time it just shows a rejection candlestick pattern, okay, before moving. But you can see here, it first went up like this. That's the first leg of the M. All right, came down with this two bearish candle, went up again with that one bullish candle before finally dropping to the downside. So that's the M pattern. That's the chart pattern you have to look out for on your entry time frame before taking a trade. Okay, if you switch over to the M5, that's 5 minutes time frame, this M pattern will be very, very clear. All right, so this would have been a very, very good trade. Why did I say a very good trade? Because it had all our confluences present. That's a 4 out of 4 trade. An A1 setup, an A1 setup. All right, let me mark this up. Boom. You see that after 1, 2, after 2 tops were created, then the third top was where we anticipated to sell, and what happened? Market really sold because our confluences were present there as well. Okay, now let me switch back to the 1 hour time frame. I want to look for a buy example. All right, this would have been a good buy, but it's a complex pattern. For a newbie, this would have been very, very confusing, because at first, if you mark up these two lows, 1, 2, then what price did here was looking like a breakout, but it was the first breakout. So for now, there's no clear buy setup here, but the reverse is the case for buy trades. Okay, the same thing we did in the sell setup is what you still do in a buy setup. All right, so let me use this trend line as an example. All right, so here we had first touch. Here we had the second touch, and here we had the third touch. So this would have been our point of interest during that week. Okay, so let's see what confluences did we have there before we would have taken that trade. So first of all, there was psychological level 1.2300. Okay, then our second confluence was the trend line. All right, then let's check whether the high or low of the week was present that day. Okay, so that was on Friday 10th. Let's go to on Monday of that week. This was the Monday of that week. So we'll have to switch over to the H4 time frame. The H4 time frame, there's even no need. There's no need, because if we switch over to the H4 time frame, the low of that week would have been around here. Okay, and I can see it's very, very far from where price reacted to. So the high and low of the week would have not been included as our confluence for that day. So this would have been this was a 3 out of 4 trade setup, and that is also good. It's also valid. All right. So this strategy, you can trade it when you see only 3 confluences. three out of these four confluences. If you see psychological level, trend line, and chart pattern, then that trade is very, very valid. All right. So let's now go to the M15 to spot our chart pattern. All right, guys. So on the M15 time frame, now you can see that trade we marked up on the H1 time frame here. What do you see? The chart pattern. What do you see here? Price came up, creating the first leg of the M, came down, went up again to create the second leg for that M pattern before dropping. All right, so that's just it. It's a simple strategy, very straightforward. All you need to do is just practice, practice, and practice. Do a lot of back testing, test it on your demo before you try it on your live account. And switching back to the H1 time frame, there's also another trade setup I want to explain to you, and that's the trend line break and retest. We can see it here. Right. At this point, market came back to this trend line. We broke it, pushed back down to retest it. That's the break and retest before finally buying, pushing to the upside. Okay. So if we were to take this trade, this would have been our point of interest. Can you see that? So that would have been our point of interest. Now, what was our confluences? What would have been our confluences for this trade? You can see here there's psychological level 1.21500. That's one. Then we have this trend line. That's two. Then let's see if we had the high or low of the week present during that week. So this was on Tuesday. Going back to on Monday, Monday 13th, we'll have to switch over to the H4 time frame to mark up our high and low of the week. So on the 13th of January, okay, so this is it here on Monday. So we'll have to mark up the high and low of the week. I'm sure you already know how to do that. The high of the first two H4 candles, the lowest point of the first two H4 candles. That's here. Okay. Now switching back to H1 time frame. Okay, so we already had 1, 2 confluences present already. So including this low of the week, that was three confluences. So switching over to M15 time frame to spot our chart pattern. Boom, you can see it. So this was a 4 out of 4 trades. All confluences present, trend line, psychological level, low of the week, and chart patterns. Everything was present. So this is a perfect example of a break and retest trade. Okay, so you see what happened after breaking out and retesting the trend line. Market bought for long. Okay, so it's been a good trade. Get your entry here, set your stop loss here. Let me see. A 1 to 2 targets was gotten easily. To even push further to 1 to 3, 1 to 3.6. Alright. Alright, this same setup here too would have given us about, let me see, about 1 to, setting your stop loss just here above the second leg of the M would have given you about 1 to 7 risk to reward trade. Man, that's massive. It even got all the way down to 1 to 8. But we all know that you wouldn't have been able to hold this trade to this down point. Okay, you don't have to be greedy in the forex market, right? Just stick to a specific risk to reward ratio. Once you get it, you are done for that day. You don't need to be greedy. All right, you don't own the market. Your father don't own the market. So anything the market gives to you, take it and base run away. All right. So that's all about this Jeffrey Benson strategy. So like I said earlier, practice, practice, practice. Practice makes perfect. So test it back, do a lot of back testing, try it on your demo account, then go live with it. All right. Big shout out to Jeffrey Benson. On behalf of all the forex traders in Nigeria and Africa and worldwide, say a big thank you for everything you've been doing you've been providing for us in the forex community. You've been a real role model to each and every one of us. All right. So, guys, thanks for watching. If you found this video helpful, hit the like button and subscribe to my YouTube channel. All right. Take care. Bye.